Good morning, everybody. We've got a mixed trade in the grain markets here early on Monday morning. Starting off a new month here, December corn futures up 1.25 at 569.5. January soybeans down 6.25 at 1243.25. December Chicago wheat up 10.5 cents at 783.25. December Kansas City wheat up 7 at 792.75. December spring wheat up 15.25 at 1067.5 into some fresh highs there. If you guys are listening on the podcast, leave me a rating or review on that Apple Podcast app in particular. If you are watching on YouTube, subscribe to the channel. We are well over 3,000 subscribers. My goal is to get to 5,000. So if you are watching consistently, if you like the content, help me out, subscribe, and hit the like button on these videos. That would help as well. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. If you would like to know when, how, and specifically I am advising cash grain sales, I break down everything by crop year, by percentage. It's tracked every single day of the week. This is in addition to my morning email, which goes out every business day about just before I start these live streams. There's a text message service, all of my subscriber-only videos and content, a ton of information here, guys, for $49.99 a month. This is a standalone product. There's no other fee. There's no other obligation. I won't try to sell you anything else. It's an information service, so certainly check it out. This is all the grain market info you will ever need in one package. To start off this morning, let's talk about weather. The U.S. Corn Belt is going to dry out. And this is a good thing because there have been some areas that have caught a ton of rain here over the last couple of weeks. You look at this, really a good chunk of Iowa, Missouri, a good chunk of Illinois, Indiana, into Michigan, Ohio, even further west, like areas of Nebraska, some areas of South Dakota. Those areas have seen 3 inches, 4 inches, some areas 5 inches of rain or more in total over the last 14 days. So you've definitely got some, I guess you could call them harvest delays at this point, and these guys would like to get wrapped up and get moving. The forecast looks pretty conducive to that. This is just a different map. This is the last 3 days of precipitation. Weekend rainfall is mostly in the eastern Corn Belt. But radar this morning, a little bit over Nebraska, a little bit over southern Iowa, but not a whole lot to speak of. The next 7 days, guys, is dry for most of the Corn Belt. So people in those areas that had the 3, 4, 5 inches of rain in total over the last 2 weeks, they should see some relief here. They should dry out, and they should have a chance to wrap up harvest, I would imagine. It'll take longer in some areas than in others, but in any case, you're not going to see any sort of real significant system move through the Corn Belt here over the next 7 days. Fund traders have been aggressive buyers of the corn market. According to Friday's CFTC report, funds were net buyers of 23,000 contracts of corn in the week ending October 26th, which is last Tuesday. Private groups estimated that funds bought another 25 or 26,000 contracts just during the last 3 days of last week. So the estimated net long in the corn market for the funds at Friday's close was about 260,000. That is large historically. It's not super extreme, but it's getting there. The soybean market is much different by comparison. Funds were small net buyers there. They hold a modest net long position. I believe the estimate at Friday's close was about 27,000 contracts, so that's not extreme at all. Very modest position. Funds are probably about flat. The SRW wheat market at Friday's close, maybe slightly net long, but large speculators, they like the corn market, and they have been adding to their positions there. They haven't been short corn, or soybeans for that matter, in more than a year. USDA did report some flash sales on Friday. USDA confirmed that U.S. exporters sold 279,000 metric tons of corn to Mexico. They also confirmed a 132,000 metric ton soybean sale to an unknown destination. There were 3 separate soybean sales, I think in total, totaling 222,000. I would imagine that China is responsible for some of these unknown soybean purchases. Mexico, of course, responsible for the corn purchase. China has been totally absent from the corn market for months and months and months now, but I would bet China had something to do with some of those soybean sales. Global wheat prices continue to rise. Russian export prices increased again last week. I think according to a Reuters article I read this morning, Russian wheat export prices have risen every single week for 4 consecutive months with the exception of 1 week. So you had crop issues in the U.S., Canada. Russia is doing this export tax deal. These are all contributing factors that have pushed the wheat market to multi-year highs. SRW futures are very close to their August peak, whereas HRW futures traded their best level since 2014 just last week. Spring wheat futures traded their best level since June of 2011 just this morning, so fresh highs there. John Deere has reached a tentative agreement with its union employees, which are United Auto Workers employees. The deal that they cut on Saturday, and it hasn't been ratified yet, but the deal would provide wage increases of 10% in the first year, 5% in the third year and the fifth year. There would also be some lump sum payments in the second, fourth, and sixth year, in addition to bonuses. This is a tentative agreement that was reached on Saturday. The UAW president made a statement. He sounded pretty optimistic, so I would imagine that this thing goes through. That strike began on October 14th, so if they can get off with a strike of only 2 or 3 weeks here, I suppose that that may be one of the better case scenarios here. It probably could have been a lot worse. The U.S. stock market slated to open at all-time highs this morning. The S&P, the Dow, and the NASDAQ on the future side all indicate all-time highs on the cash open. The S&P lost more than 4% in September, but then gained almost 7% in October. Earnings season's been generally positive. Investors continue to bet on economic recovery. Fed policies remain generally favorable, although we could see some tapering begin this month. But the interest rate hike is not going to happen until another 12 months, probably at the earliest. Reports this week: we've got export inspections today, crop progress after the close, ethanol production Wednesday, export sales Thursday. Not a good close for the cattle market on Friday. Now that October cattle's off the board and it went up, but the deferred contracts were down again, and the feeder cattle market's been under some pressure. Cash cattle trade was better last week, 126 in the south, as good as 127 in the north. The boxes were just a little bit higher on Friday. Head of the cash open, the U.S. dollar is flat. The S&P's up 19 points. The Dow's up 150. Again, the stock market should open at all-time highs here. Bonds off a little bit. Precious metals mixed. Crude oil is up 27 cents in the December WTI at 83.85. Everybody have a great week. I will talk to you guys same time tomorrow.